Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the lone stock in the energy sector of the Trinidad and Tobago Stock Exchange. Of course, we're talking about TTNGL, whose investee company is Phoenix Park Gas Processors Limited, or PPGPL. And we're going to take a look at the financial performance of that particular company for the 9-month period ended September 2022. And we're also going to touch very briefly on some of the wind-up or termination details related to the Clico Investment Fund, which is set to wind up in very early January 2023. So turning firstly to TTNGL, for that 9-month period ended September 2022, the company would have reported an earnings per share figure of $1.07 per share, which is a 23% increase from that 87 cents per share generated in the prior comparable period of the 9 months 2021. Now, of course, the major driver of this performance was the share of profits from its sole investee company, PPGPL, or Phoenix Park Gas Processors Limited, which increased 23% from 135.5 million TT to 166.6 million TT dollars over the comparable periods. Interest income fairly flat, expenses again under control and fairly flat, and of course that would have just filtered through straight to profits after taxes to 134.1 million, increasing to that 165.1 in the most recently concluded period. Now, the major driver for the performance of its investee company, PPGPL, for TTNGL has been that increase in natural gas liquids prices, and we can see a continued elevation of natural gas liquids prices in terms of butane, propane, and natural gasoline across that 9-month period of 2022, in part attributable to supply chain challenges, but of course certainly influenced by the ongoing conflict between Ukraine and Russia, which has dislocated energy markets to quite an extent. And that has been reflected in prices, with butane over the average 9-month period of 2021 to 2022, increasing about 37% or 40% rather, from $1.09 per gallon to $1.42 US per gallon. There was a 23% increase in propane prices to $1.21 per gallon from 98 cents per gallon, averaging over the 9-month periods. And natural gasoline also increased on average to $2.03 per gallon from $1.48 per gallon, roughly a 37% odd increase there. So certainly robust product prices helping out despite some modest decline in domestic production for TTNGL, where we can see that exports in that blue column would have fallen just around 8% from 4 million barrels for that January to September 2021 period to 3.7 million barrels of NGLs for that January to September 2022 period. So a decline, but it seems to be some stabilization in production levels, some modest stabilization or heading there anyway in domestic production. Of course, one of TTNGL's major expansion drives internationally coming through its investee company, PPGPL, is expected to stabilize and in fact grow earnings for the company in subsequent periods with expansion of in-transit cargoes and supporting infrastructure taking place within the US, and also with one eye on regional expansion as well. Now, for investors, we can see that the book value per share of TTNGL has continued to consistently increase from $27.71 TT in the 9-month period of 2019 to just around $32.15 in the most recently concluded financial period. And that leaves the stock trading at a price-to-book ratio of 0.7 times, which is still a fairly attractive discount relative to its historic levels of around that 1 time, which would have seen pre-COVID. And at a price of $21.04, the stock is offering investors currently a dividend yield of around 4% and trading at a price-to-earnings ratio of 6 times. So on the basis of robust NGL prices, which are anticipated to continue barring some significant and rapid thawing of relations internationally between Russia, Ukraine, and the western part of the world, we expect robust NGL prices to continue. And with that international expansion drive firmly in front of PPGPL and by extension TTNGL, Bourse is going to maintain an overweight rating on TTNGL for the time being. Turning quickly to the Clico Investment Fund, or CIF, well, it's no secret, it was publicly announced that the fund is going to wind up in January 2nd, 2023, to be specific. And the last trading date of the CIF is anticipated to be December 30th, 2022, based on several announcements that have been made. And distribution of the proceeds of the fund in specie is going to take place during the course of January 2023. There's no specific details on the exact timing of that just yet. What are investors going to receive for their CIF shares, or in exchange for their CIF shares in specie? Well, for every one CIF share that you own, you're going to receive roughly 0.2 shares of Republic Financial Holdings shares, which will be public, which is of course publicly listed. So roughly for every 5 CIF shares that you have, you're going to receive in exchange 1 Republic Financial Holdings share, limited share. You're also going to receive 3.445 units of government bonds, which are also assets in the fund for every 1 unit of CIF, as well as any residual cash that comes from the wind-up and termination of the fund. So investors could, of course, keep in touch with Bourse for more information on this particular transaction, which is set to take place very early in the new year, January 2023. So that's it for this week's edition. For more information, of course, you can give us a call at 2BORSE or 226-8773. Email us at invest@boursefinancial.com, or you can check out our website where all of our research is absolutely free at bourseinvestment.com. Have yourselves a wonderful week. Enjoy the World Cup, and we'll see you next time on the Bourse Report.